And yes. What's up, everybody? Welcome back to Altcoin Daily, where we drop a video about cryptocurrency on the regular. A lot of you guys have even accused this channel of dropping a video on crypto every single day. I don't know. All I know is this is a great place to get your daily dose of crypto. All right. My name's Austin, and it's great to have you guys back. I missed you. All right. Anyway, Forbes. Forbes dropped an article yesterday titled, "A Bitcoin Halvening is 2 years away. Here's what'll happen to the Bitcoin price." If you know nothing about halvenings, don't worry. We're going to dissect that in this article and put it into a nice perspective for the common man. Because you guys know I'm not an expert, so this is not advice by any sense, but I'm just really passionate about cryptocurrency, so we're going to discuss it. And then at the very end, we're just going to look at past markets and find out what happened to the Bitcoin market when these past halvenings have occurred. Because, fun fact, we have only ever had 2 halvenings in the history of Bitcoin. So let's get into it. In layman's terms, a halvening is what happens to the block reward that miners get every certain amount of transactions. Stay with me. Stay with me. We all know that miners, they're the backbone of Bitcoin, the Bitcoin network. Miners are what allows transactions to take place, basically. And miners get a block reward as incentive for mining. And the block reward is Bitcoin. And when a halvening occurs, this block reward gets cut in half. So let's check this out. At the beginning of time, aka 2009, when Bitcoin was invented, the block reward was 50 Bitcoin in one block. And it was 50 Bitcoin for the first 210,000 blocks. Then in 2012, this got halved to 25. And then 2 years ago, in 2016, this got halved to 12.5. And that is the block reward now. So basically, that's a halvening. If you like Bitcoin, then you're going to like this video. But just know, even though the halvening is 2 years away, the reason I want to discuss this with you guys now is, one, because this Forbes article dropped yesterday, so a lot of just the common business folk that haven't even heard of Bitcoin are going to start to know about this halvening, so it's relevant to us as investors. And 2, it's very important. If you subscribe to this channel, you know that we often talk about having an investor's mindset. And part of that means staying ahead of the curve, ahead of the game, instead of playing catch-up. So let's get into it. In around 2 years' time, so in 2 years, in 2020, in May, the coin reward for mining new Bitcoin blocks will drop from 12.5 Bitcoin, which is what it is now, to 6.25 Bitcoin. And people are talking about it. Much has changed for Bitcoin, cryptocurrency, and blockchain since the last Bitcoin halving, or halvening, both are correct, which happened 2 years ago in July of 2016. And every single time it happens, nobody is entirely sure how the Bitcoin price or just the market is going to react to this. Well, one thing we do know, in basic terms, if a supply goes down in something, then demand goes up, price goes up. And make no mistake about it, when the supply of Bitcoin gets cut in half, when you are earning half the amount of Bitcoin that you used to through mining, it becomes more valuable in its scarcity. A Bitcoin halvening, there have been 2 since Bitcoin's creation, is a fixed event that occurs every 210,000 blocks are mined. So let's talk about what has happened in past halvenings. Well, some 12 months after the Bitcoin halving event in 2012, the Bitcoin price reached what was then an all-time high of $1,000. The 2016 halvening, 2 years ago, heralded last year's bull run, which we all remember, last December, where Bitcoin again reached new all-time highs of over $19,000. If you guys read this article, I don't know what you guys thought, but to me, this was phrased a little deceptively, because if you subscribe to this channel, we're always talking about the market and what it means for us as investors. And at the end of every month, that's usually when we see the all-time highs. And this even says 12 months after the halvening in 2012. So it's a little tricky. You know, I don't want to say full out that the market saw these all-time highs at the end of the year because of the halvening, because let's be real, the market sees new all-time highs really at the end of every year. But it does not mean that the halvening does not affect the market in some way. Let's keep going. If you guys are still with me, feel free to give this video a like. Helps me grow as a channel. But check this out. Many Bitcoin and financial experts think the halvening is similar to the way traditional markets price changes due to interest rates changing or due to commodity supply changing. So obviously, when the supply of a commodity goes down, demand goes up. Obviously, you know, when interest rates on anything in the market gets lowered or higher, you know, that affects how many people are investing in the market. Let's check this out. This is what Bitcoin analyst Glenn Goodman says. Previous halvenings have shown negligible impact on Bitcoin's prices. He says nothing really happens. This is because everybody knows it's going to happen way in advance. This is true. If the market knows the supply is due to be reduced at a certain time, which we do, and by what it will be reduced by, which we know, it will begin applying that reduction to the price gradually. So I agree with this. We know what's going to happen, so there'll be no sharp spikes or sharp dips, but there is some sort of change. Let's check out these quotes, then we're going to get into how the market has been affected in past years. Chris Wilmer, professor, says, historically, the cut has had very little immediate impact, although the price usually rose after. The rise in price makes sense insofar as large buyers of Bitcoin to invest in Bitcoin, you either have to invest through the market, like you and I probably, that's how I do it, or you have to mine for Bitcoin. And it just makes sense. If you're getting less Bitcoin through mining, more people are going to be forced to get Bitcoin through the market. More money is going to be coming into the market. Interesting. Well, cryptocurrency markets are often very event-driven. I think we all can agree on this. We all know, especially if you subscribe to this channel, when mainnet launches happen or announcements for altcoins happen, realistically, the price soars on that altcoin more often just because of the hype for the announcement rather than the event itself. So cryptocurrency markets are often very event-driven. And as we get closer to the next halving, Bitcoin's price will receive a boost from those anticipating the forthcoming reduction in new supply. In the months leading up to the last two halving events, we saw Bitcoin's price steadily trend upward and then power higher following the reward halving. So let's get into it. This is the value I want to bring to you guys on this, watching this video, because we're just not reviewing this Forbes article. Let's check out the market. This was Bitcoin in all 2016. So at the first half, the block reward was 25 Bitcoin, and then a halving occurred, and the block reward was 12.5 Bitcoin, which is what it is now. And that halving occurred somewhere around here. So what does this mean to you? Well, if there's one takeaway I think we can get from this market, I mean, in the long run, nothing really happened. We're going to get into the fears because things have changed a little since 2016. But if you look, there was a semi-little spike here, a little uptick. We don't know why the market goes up in general, but a lot of it has to do with people coming in because of all the hype. When the media, you know, hears about something happening in Bitcoin, people come in, FOMO in, rush in. So I think more happened because of the hype around the halvening rather than the halvening itself, because then the correction happened and it all kind of evened out. So nothing that drastic, but there are a few more factors in play this year because things have changed. Well, first, before we read this, know that miners not only get block rewards, which are cut in half by the halvenings, but they also get fees. We all see fees when we invest on, you know, Binance or Coinbase or wherever. Fees are taken out of our transactions. Well, the more transactions, the more fees. And in December of this last year, there was roughly 400,000 transactions per day. Since then, it has fallen in half, sort of a halvening on its own. But as the Bitcoin reward for mining new blocks on the blockchain falls, so as the reward is cut in half, miners will increasingly rely on fees because that is their incentive. So there's some fears there. Let's check this out. If the potential rewards from mining are lower, which they are, they will be half as low or half as high because of the halvening, that may discourage many people from mining Bitcoin. And if less people are mining, there's a fear that the fee, since there's so many transactions, the fees are going to skyrocket. But here's the thing. Here's the thing, team. Check this out. The beauty of Bitcoin protocol means that if hashing power leaves the network, or miners are leaving the network because they're not getting rewarded as much, then the difficulty of the miners that still are there will automatically be reduced. So the less hashing power, the less miners mining, and the less electricity will be required to mine each new Bitcoin. So basically what this saying is, even if some miners leave because there's less of a reward, it's all going to even out in the end because it's going to take less of an effort to mine since there are less miners there. That is what it's saying in a nutshell. Are you guys still with me? Well, we're almost done. The only last thing I want to bring you guys is there's always talk around when this happens that there's going to be a 51% attack. And if we saw the season finale of Silicon Valley this year, then you guys know all about it. That was a key plot point when they invented Pied Piper token. But let's just check this out. Another described threat concern is the increased risk of a 51% attack. Bitcoin is decentralized in general, but if somebody gets 51%, that's control. In this scenario, the reduction in mining reward could make miners leave, resulting in more centralized mining landscape. Just know, of course, since neither hash rate nor price dropped much at all in previous halvenings, the downward spiral scenario did not play out. If anything, when the halving occurs, you're going to hear a lot of FUD, a lot of people saying, this is the end, the sky is falling. Just refer back to this video and these articles and know that it's often just the fear of things happening rather than the happenings of the halvenings, say that 5 times fast, itself that occurs people to leave the market. We see 2016, there was upticks, there was downticks, then it evened itself out. All right, guys, and last thing, if you guys want to count down the halvening, Bitcoin block half. This is a countdown that we can all go to, not just me. Just hit up that website. It will be happening in 728 days, this many seconds. This website gives some cool things. It tells you the percentage of 81% of all the Bitcoins ever have already been mined. There's only almost 4 million left to mine. This is how many till the next halvening. And then Bitcoins generated per day. There's 1,800 Bitcoins generated per day. I know we have some miners on this channel. If any of you guys are in that world, let me know if you're taking advantage of this mining. But I doubt it. Usually it's left to big farms. Anyway, I hope you guys got some value out of this video. Feel free to give the video a like if you did. It just helps me grow as a channel. And you know what? We're not called Altcoin Weekly. So tune in tomorrow and we'll have another... Oh my god. You know what? I'm not going to start the video over again. This channel is as transparent as blockchain is. So let me just say that again. We're not called Altcoin Weekly. We're called Altcoin Daily. Damn it. So that means stay tuned for a video every day. See you tomorrow.